Good morning, everybody. Welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. It is June 6, 2017, and we are talking about what's hot on the open here in the U.S. markets. And we have an interesting market. We have a market that is trading not like what is something wrong, but more like what may not go right. There are plenty of components of this market right now that have both the bulls and the bears, let's just say, sitting on the sidelines. Taking a look right now at the Dow Jones, you see it down a little over 0.2%. That's good for 57 points to the downside at 21,128. Now, what I mean by looking for something that's not right, for example, watching the data points. The other thing is the geopolitical concerns. You have let's just put this in context. Thursday is going to be the day of the week that everyone's going to be looking at. Why? Well, first of all, you have the results that will be coming in from the June 8th UK elections. The Conservative Party had a substantial lead going into the June 8th. Then you had Manchester and then the recent terrorist attacks in London. That lead for the Conservative Party over the Labour Party has now shrunk to basically they're talking anywhere between 5 percentage points to 1 percentage point. It fluctuates. That's what polls are worth anyways. Then you have the testimony that's going to be coming up. And we're going to have former FBI head director Comey talking about what went on with the Russians during the elections, and also, which is what everybody is waiting for. I mean, for God's sakes, they're having specials on this thing. And then you're seeing the treasuries. And before I go over the general market indices, I've always said the treasury markets are the eyes to the world. Other than the Russell 2000, which is my canary in the coal mine, the fixed income markets kind of give you a preview of what the current state of the market mentality is. And right now, seeing the 10-year up this morning at 102, that means the yields have dropped below that 220 mark. We discussed this last night, but to me, when you see that the 10-year yield is now at 2.14%, to put this into context, if we look at this weekly chart right now, you're seeing that just a few short weeks ago, this thing was trading at 2.6%. Now it's trading at 2.14%. And we've been hitting all-time highs in equities, and bonds keep increasing in price and going lower in yield. As a matter of fact, if you look at bonds right now, the bond bulls, in other words, people that are willing to buy the 10-year and the 30-year bonds, it's been moving to the upside and with some conviction over the last week or so. You see that it's broken its 20 and its 50-day moving average. It settled last night, folks. The bonds right now, which blows my mind, are in a bullish mode to the upside. Now, what are one of the catalysts of why the longer end of the curve, like the 30-year, when you see that the 30-year right now is moving to the upside, what are some of the drivers there? The Chinese. The Chinese basically said that they are prepared to increase their treasury purchases and holdings. And so that basically has the markets, especially with the Chinese markets, which have been, to say the least, on their heels for the last 2 months. You see some potential downside that's starting to resurrect itself. But again, it's not about what's wrong with the market. It's about people preparing for what's not right with the market. Taking a look at the S&Ps, down ever so slightly. Not as much or with as much velocity as the Dow, but the S&P down about the same amount, 0.2%. You have the NASDAQ, though, holding up. And this is one part of the market that concerns me. The tech market. There are four names, the FANGs, the Facebooks, the Apples, the Netflix, the Googles, the Microsofts, they're holding up this whole entire market segment basically on their backs. You saw that Apple, which is having their big worldwide developers conference, come out with some stuff, but in front of that conference, they basically had a downgrade by a small entity. You're also seeing that we would rather see a more diverse, broad-based rally in this sectors. Now, yes, semis have been running to the upside, so you could say, well, what about the NVIDIAs of the world? Sure, but AMD, Intel, those names, while moving to the upside, those are leaders, and we need to have more of a holistic move in the tech-heavy sector, not just on the backs of 4 to 6 stocks. The Russell 2000 is starting to lag, and we've seen on a weekly basis that it bounced off of its 20-day moving average, but if you look at the daily chart, this is where I have some concern. Right now, you have a challenge of the 20 and the 50-day moving averages on a daily chart. So the short-term and intermediate-term bulls in the domestically sensitive and centric, small business-centric index that tracks U.S. companies, small U.S. companies, which are the lifeblood of this country, they're starting to re-challenge their short-term and potentially their intermediate-term. Watch this closely. Down 7 points right now. That's good for almost a little over 0.5%. On the Russell 2000 at 1388. It's challenging that 1385, and then if it challenges that 1380 level and breaks, you could see some further weakness. That's my canary in the coal mine, folks. If you see small caps start to get weak, they're no longer leading. They were lagging before. They continue to lag. Now they're leading to the downside. That is not a net positive. That means that while we'll get through Thursday, that Comey Senate hearing is going to be critical for this. It's going to put pressure on the Trump presidency, on the Trump White House, and regardless, this is going to get spun 6 ways to Sunday, and we have to watch this very carefully. So what do you take away from this? It's not what's wrong with this market, it's what's not right. And that's what we're going to watch for. You're going to keep your powder dry. As I stated last week, and I will continue to state, as I've stated over the last couple of weeks, cut your size down. 25 to 50% of your normal size on any type of transaction that you're doing, both on the long and short side, and be very strategic. As a matter of fact, join us for Strategy Now at 1:30 Eastern, 12:30 Central Time. I'll talk about some hedging strategies that you could utilize that are going to potentially fit your portfolio, especially when you look at your holistic net long portfolio. We're going to talk about some strategic ideas if we potentially get some downside or volatility in the market. So join us at 1:30 Eastern, 12:30 Central Time here at MarketStream.live. See you then.